My name is Jordan said, is Marc LoPresti. I am joined by the famous, the infamous, the irreplaceable Dr. Jon Najarian. Jon, thank you so very much for joining this morning. And Jon and I are going to be talking about Bitcoin and crypto, trying to help this audience unravel the mystery of what's going on. Lots of people feeling left out. And Jon, just in the past 24 hours, it seems like we have another headline that hits the tape that impacts Bitcoin price, of course, to the upside. Granddam, Goldman Sachs getting back in the action, reopening their crypto desk since shuttering it in 2018. Vanek announced this morning they're listing another Bitcoin ETF on the CBOE. And even our friend, Mr. Wonderful, Kevin O'Leary, a frequent speaker at market rebellion conferences, both live and virtual, changing course, reversing direction, and getting in on the Bitcoin madness. Jon, help us unravel and make sense of all this.
Well, I guess even Goldman Sachs has that FOMO, that fear of missing out. You guys will hear these terms a lot from Marc and I, because crypto speak is pretty close to regular English, but then there are some variants in there too, and it makes it interesting. But yeah, FOMO is something that they discuss a lot, and obviously Goldman made a commitment to cryptocurrencies, in particular Bitcoin, building out a trading desk in 2018. When they closed that down, that's not a small task, because obviously they had picked out some of their best traders, they thought, to staff that sort of situation. And then when you take that away from them, they kind of go to the back of the line, and maybe they even get shunned within the firm. So that's a big move. And to get back into it is also a big move. Kevin O'Leary and his castmate, Mark, on Shark Tank, Mark Cuban, both are now cryptoneurs, or whatever we want to call them. Mark was famously against it because he said it's not a currency, and I tend to agree. You and I and nobody in the audience at these levels of trade are going to use this for anything but perhaps a Tesla purchase. Put two Bitcoins together right now and you got a Tesla. That's right. But you're not going to use it, or fractions of it, to go to the grocery store. That's very accurate. But once Mark got over that, he said it is a store of value. It is an asset class, whether you want to call it digital gold or not. And you and I, Mark, are lucky enough to have embraced it through altcoins as well as Bitcoin, and even some of the exposure in the crypto, the stocks that are freely trading that are really exposed to crypto.
So Jon, let me just stop you. Kim's only given us 30 minutes, and we've already done 3. And I want just a couple of housekeeping notes. We have a few slides. We're not going to do slides throughout the talk. We're going to do them for just a couple of minutes. And folks, I want to encourage you, we're going to leave some time at the end for Q&A. Every time that I talk crypto on a Money Show event, the number of inbound questions and messages are numerous and distinguished. We want to try to get to all of them. But Jon, before we do that, let's talk for just 2 minutes about the basics, right? As you and I always discuss, money at the end of the day, because people sometimes ask, Bitcoin and these cryptos, they have no intrinsic value to them, right? Now that's of course changed. But I often think about things, taking it sort of from the top down. Money at the end of the day is really a social construct, right? We agree to exchange something of value, a juicy steak, a bottle of fine wine, a car, for oddly decorated pieces of paper with the picture of dead presidents on them, right? Why is that? It's because we've agreed, since the abandonment of the gold standard, that currency has intrinsic value. Is that not the same theme? Is that not part of what's propelling the institutional acceptance of Bitcoin and the crypto asset class? Or do you think there's other factors at work?
I think that's a big part of it, Mark. And the biggest thing, again, to throw out a stat, or stacking Satoshis, as they say, Satoshi, whoever that was, a person or a group, when they created Bitcoin, they set it up so that there would be just 21 million maximum, and we wouldn't reach that number for another 100+ years from now. So far, I guess 18 point something million have been mined, Mark, through that proof of work that Bitcoin does, with all these distributed ledger, rather than just you having JP Morgan folks saying exactly how much money you've got in your account. When you've got something digital like this, you have to make sure it isn't double spent. And that's what all these different nodes, known as miners as well, that's what they do. They're out there proving that Mark has not spent that crypto. And that, you don't need to trade in an entire cryptocurrency, an entire Bitcoin, which, $50,000, give or take. You can trade fractions of it and so forth. But that fraction can never have been spent before. And that's what that process, that distributed ledger does. So I think, Mark, that this is something that obviously millennials and a lot of us have gravitated towards, not because currency goes away, but because the Fed is rapidly printing money, the European Central Bank rapidly printing money, and that devalues those currencies. And so people wanted something that couldn't be devalued by government fiat. And there you have cryptocurrencies and decentralized finance.
And Jon, what is it? We often talk about institutional acceptance of an asset class driving substantial appreciation in the value of that asset. And we saw it with cannabis. We've seen it with other assets over the years and the decades. What is it that has gotten the institutions into the game now? And I'm not talking just about institutions in terms of financial market participants, but even corporates. You look at Tesla, Square, companies like that talk about allocating substantial portions, or 1% or more of their treasury balance sheet to crypto. What is different today versus perhaps 2017 or 2018, where we saw the last meteoric rise of crypto, led, of course, by Bitcoin? What's happening today?
And just think back to that just for a second, Mark. When we're talking 2017, we're talking a cryptocurrency, Bitcoin, that was way under $2,000 and spiked all the way up to nearly 20,000, 19,000 and change in 1 year. Now, we haven't done 20x since the election, but we've done phenomenal. I mean, we've gone from 10,000 to 57,000 like that. I mean, it's been an amazing run. And I think part of it, Mark, is that you don't just need to have a crypto wallet with a Trezor or whatever it might be. That's like a little jump drive, folks, you plug into your USB port and you put your crypto on there. Now there are these multi-sig wallets, multi-signature wallets. There are people like PayPal, which has 270 million people on it through Venmo and PayPal. Then you've got Square with, I think, 80 million people on it with the Cash App, as well as Square and their bank. When big institutions like that make it much easier for Joes and Janes to get on, I think that's why the institutions really gravitated towards it, Mark, because then it wasn't just, crypto geeks. All of a sudden, it's a real asset class that you can store safely and that you can recognize the potential for the upside, because the entry isn't just a series of 16 different digits that you have to memorize or something like that. It makes the more easier you can make it, just like Steve Jobs did with Apple. The easier you can make it for a consumer to interface with it, the more rapid the adoption.
And of course, one thing that you and I talk about a lot, but we don't hear talked about that much in the crypto crowd, that I believe is another catalyst of ongoing price action in Bitcoin to the upside, is the fact that we have at the same time the single largest generational wealth transfer from the boomers to the millenniums in the country's history. And where is this money flowing from? It's flowing from an older generation whose familiarity and comfort with DeFi and crypto is perhaps lukewarm at best, to the generation that were the first adopters, folks that helped create this new asset class. Jon, do you see that massive generational wealth transfer happening now? Do you see that as another catalyst of Bitcoin value to the upside?
Clearly, yep. And other folks, you and I discuss, Mark and I get to discuss things like this, folks, because we're working on at least one, if not two, Bitcoin funds right now. And we're working on that together. So when we look at things like, well, what are the drivers here? Is it FOMO, that fear of missing out? Is it institutional adoption? Is it the millennials that are, getting that wealth transfer that Mark talks about? It's all of that. And it's probably as well that people are looking for something that is borderless. I mean, literally, with my cell phone, Mark, I don't even need to have it on my cell phone, but you could have those digits up here. You can walk across a border. You remember in the old days, folks, when they'd ask you, are you coming into our country with 10,000 or more? And you'd say, well, yeah, I have, $10,000 in euro dollars and dollars, for instance. Not that I do that, but some people do. These days, you can cross borders with hundreds of millions of dollars, whether that's in your head, whether that's on a Trezor, a multi-sig wallet, on your iPhone, through a company like Voyager. Again, they make it so easy for people to do it, Mark, that I think that's why we're just going to see continued growth. And let's not forget all the money that we're printing not only is devaluing dollars, but it's also giving away dollars. Robinhood has soared to these dizzying heights, and Coinbase has as well, because people are given money from the government. Most of them need it. Knock on wood, Mark and I haven't been given any money from the government, and we don't want it, right, Mark?
That's right.
Yep. I want the 1,400 to go to the people that need it, but a lot of those people that are getting the 1,400 are sitting there saying, you know what? If I would have put some of that into Bitcoin when I got my last check, I'd be 5 times richer than I am right now. And they're doing just that. They're buying stocks and they're buying Bitcoin.
There's no doubt that whether you call it the Reddit rebellion, the Robinhood revolution, to me, it's really just a continuation and an extension of the rise of the prominence and the importance of the independent investor. And we've got, and folks, I don't want to go down a rabbit hole here. This is a webinar unto itself. But with upcoming regulation change this month with Reg CF, Reg A+, lots of changes going on in the VC world, your role, Money Show Nation, your role in that VC ecosystem is going to become even more important. But Jon, bringing it back to Bitcoin, I want to try to bring some real practical, we called it pro tips and tactics. I want to bring it back to helping our audience understand how to navigate this. And let's start with Bitcoin price, right? You guys had on a special roundtable yesterday with Market Rebellion, Renato, the chief investment officer from the famous Cathie Woods ARK investment. He made some rather startling predictions, or maybe predictions is the wrong way of putting it, comments about the ongoing allocation of corporate treasury to BIT. Can you share a couple of those with the Money Show?
Yeah, and the scary thing, Mark, was I think what caught your attention, it wasn't scary, but it was, I think you and I, of course, got excited about it. And for some people, they would just shake their head. But he talked about the difference, folks, between a 1% allocation of a corporate treasury and a 2% allocation, and how much bigger a 2% allocation is. Obviously, it's twice as big. But when we're looking at how few coins are actually out there right now, give or take, let's say there are 18 million coins, Mark. And you and I talked about this, with the slides. We don't need to show it, but just to give you guys an idea, there are 18.6 million millionaires in America right now. there are 46 million millionaires in the world. If every millionaire in the United States wanted to own a Bitcoin, they couldn't. If every millionaire wanted to own one, they could not own one. Why? There aren't enough Bitcoins yet. And there's only going to be 21 million of them max, unless by mutually assured destruction of wealth, the majority of coin owners decided, yeah, once we hit 21 million, let's double it up. Let's make it 42. Very unlikely that that would happen, cutting their value, because not like splitting a stock. They would be saying the total supply of these, doubling it up or increasing it by any amount, would devalue the currency that's basically, or the asset that is existing, because it can't be devalued. So you know, I thought when Renato hit that one, I could practically hear you through the other end of the webinar, Mark, you know, gulping hard when he said, well, if we went from 1% to 2%, but I'll let you take that.
Well, so, and I'm very bad, folks. I have to apologize. I'm bad at running slides and doing the talk at the same time. So you're getting some slides here and there, but people are not tuning in for the slides, John. They're tuning in for the banter. At least that's what my mother tells me. But what are we talking about here, folks? We're talking about a bunch of indicators that you can't ignore that lead to, over time, an upward trend in Bitcoin price. Renato, I think if I remember correctly yesterday, John, talked about corporate balance sheets. The S&P 500 put 1% that would justify, of treasury in Bitcoin, that would justify a $100,000 price target easily. And if you went to 2%, this was a scary one. If you went to 2% of treasury in Bit, you'd be talking about $500,000 plus per coin. Now, look, we are not suggesting that we have a $500,000 per coin price target on Bitcoin. We don't. But what we are saying is, if you look, and this chart illustrates the institutional acceptance, all of the various events that have happened over the past year or so. We talked at the top of the show about Goldman getting back in the game, Bank of New York Mellon, JP Morgan, this ongoing institutional adoption, which always consistently, 100% of the time, and it's hard to say that in financial markets, 100% of the time, institutional adoption of a new emerging asset class drives price appreciation, period, end of story. So this is a chart that talks about price of Bitcoin relative to usage and demand. And maybe, John, that's a good jumping off point for a very important topic I want us to cover before we get back into some of the tips and tactics. And that is Bitcoin as a store of value and currency, right? And you touched upon that earlier. It's not a currency right now. It may be one day. It's not a currency right now. Now, it's saying the SEC's classification of it as a currency, which only serves to further confuse everybody. But talk about that for a minute. Talk about Bitcoin as a store of value and its own unique asset versus Ethereum and the rest of the list and the DeFi story. Unravel that for the audience in like 60 seconds if you can.
Sure. And, you know, one of the easiest ways, I think, folks, is to understand that each time these miners, these nodes on the Bitcoin are basically proving that that coin has not been double spent, and that gets put into that distributed ledger so that everybody knows exactly where that one particular transaction is. They get rewards. Those miners get rewards. And that reward is a Bitcoin, which means, of course, a $50,000, that's more or less where it is right now, a $50,000 reward. And they're competing against thousands of other people on that node. That's why they buy, you know, all these NVIDIA chips.
Right.
That's why they have all these computers. That's why they need cheap electricity to compete. Because if you're paying high electric costs and you have all these rigs, as they are known, are running to prove out this mathematical formula so that you actually win, if you will, air quotes, win, then you get to spend or hold that Bitcoin. And the amount of those Bitcoins, Mark, was cut in half those rewards were cut in half last May. This is what they call a halving. And that means that instead of having, for instance, just to throw it in easy to understand numbers, instead of 1,000 Bitcoins that will be awarded, it's only 500. And that number keeps getting cut in half, goes to 250, goes to 125, and so forth. So as those rewards go down, that's the supply of new coins. So you need Mark or Jon or any of you to be selling your coins, or we've got a shrinking amount of supply coming to the market since so many of us want to just hodl, or in other words, hold. That was what a drunk guy typed on his computer. Hodl, I'm hodling my Bitcoin. When you're hodling that, when you're just holding on to it, you're not, it's like in GameStop, you're not lending your shares. You're not putting them out there. You're not selling them. And if you're not selling them, they have to depend on other supplies like these miners. That's new supply every time they get a Bitcoin, but they get half as many this year. And in a couple years in the future, it'll be half as many again. So you've got a situation, supply and demand, Mark, that is driving Bitcoin. Whereas something like, for instance, XRP, which is Ripple, there's 38 billion Ripple tokens, coins out there. There's only going to be 21 million Bitcoins. So you get the idea that some of these altcoins, as they're known, have issued mass quantities, and some of them virtually unlimited. 38 billion sounds pretty close to that, versus a fixed supply on the other side. And then you've got Ethereum, which, as Mark has kind of alluded to, is a smart contract that allows you to build other things off of that. And that one, by the way, has gone from $300 last year to 2,000 just 2 weeks ago, and now it's, I think, $1,500, Mark.
Yeah. Well, so Jon, I'm told by our Money Show friends that we've got a slew of questions from the audience, and I want to leave a good 5 minutes or so for that. But before we get there, what are some of the common mistakes that new investors in crypto and Bitcoin make, and how can we help them avoid those mistakes?
Number one, they probably forget their password, Mark, because a lot of Bitcoins have been lost forever, folks.
That's right.
Because people have been smart enough, lucky enough, whatever, to buy a few Bitcoins when it was $20, $50, $100, whatever. Now that they're 50,000, they go back and they try to remember their password and they can't.
Right.
So that's one of the terrible things that happens, and it's another reason that supply isn't what we think, because again, a lot of those coins, some people estimate 5% or more of those coins are lost forever. But that's one of the problems. Go ahead.
Don't buy pizza with it either.
Yeah, don't buy pizza with it. 10,000 Bitcoins for a pizza, but that's when they were virtually free. Bitcoin was, hundredths of a penny. And, famously, a gentleman said, "I'd like you to deliver me a pizza. Whoever will send me a pizza, I'll pay them 10,000 Bitcoins. And somebody sent 2 pizzas, I think, to his house, Mark, yes. And he did pay them with 10,000 Bitcoins when they were hundredths of a cent. And if you held on to any of those, of course, you're one of the richest people in America right now. But I'd say when we're looking at this, folks, Mark and I look at it in terms of if you're new to Bitcoin, you could buy any fraction. You don't need to buy 50,000. Just because 50,000 is how much it is, just like you don't need to buy a round lot, 100 shares of Apple. You can buy fractions of that. You can buy a single share of Apple instead of 100 shares. You can buy 50. You can buy, a lot less than that total. And that's one of the reasons we're starting a fund, is that there's an awful lot of people that want to participate, don't want the hassle or the risks of holding it themselves or perhaps losing it, and yet want the upside appreciation of that asset. So, that's a shameless plug for our fund.
and diversification, because, as we said, and there's so much to cover, folks, I'm sorry that we don't have more time. It's a diversification story too, because it is not all about Bitcoin. And last thing, Jon, are we day trading this stuff?
Not really, although we are hedging.
Right.
I mean, so for instance, folks, there are listed exchanges like the Chicago Mercantile Exchange that has the full faith and credit of every big bank in the world on it. And they have options on Ethereum, options on Bitcoin, futures on Bitcoin, and so forth. Then there are exchanges, some of which, like Coinbase, is going through an IPO in the next few weeks, and that company is valued between 60 and 100 billion dollars.
Unbelievable.
So, you know, there's Binance, there's a whole bunch of these massive exchanges, some of Deribit, for instance, that have options on a number of currencies and so forth. So our job is to get investors exposure through ownership, and then in the case of one of those two funds, to hedge it as best we can through regulated products in the case of the CME, or off exchange OTC products for, you know, non-US folks.
And so that was kind of a not so subtle implied warning, folks. I don't day trade these assets. I don't recommend, especially for beginners trying to day trade these assets. The volatility makes it tempting, but it's real easy to get hurt. Jordan, I know we've only got 4 minutes left. I'm going to turn it back to you. I know we've got a lot of questions from the audience. Pick a few of the top ones, and Jon and I will go rapid fire through as many as we can.
Absolutely. Yeah. So if we can try to do a rapid fire, maybe 20 to 30 seconds per question, let's jump through as many as we can. So our first viewer writes in, well, in your opinion, will there be a crypto correction coming, representing a good time to buy in? If so, what fund investment option is a practical choice? Is it dollar cost averaging into Bitcoin, or how would you recommend investors play a correction possibly coming soon?
Jon?
I'd say, and I've done it myself recently, I didn't sell any Bitcoin as it hit 57,000. I bought some more at 46. And I think we could see a pop back into the 51, 53 range, something like that. This is to the US dollar for you international folks. But then I think it does trade back down into the high 40s or even low 40s as far as 40,000 per coin. And that's why I scale in when I'm buying. I don't go all in. Whatever available cash I have, I don't just say, okay, I'm going to buy, you know, X amount of coins down here at 44 or 45 or 46. By the way, it was 43.8 over this weekend, Mark, and then traded over 50 today. So there's plenty of room there to trade, but you don't need to go all in. I would scale in prudently.
Excellent. Thank you. Our next viewer writes in, top 2 or 3 favorite preferred platforms for buying and investing crypto.
I have one favorite. Mark and I are both investors in it. We are not insiders, but we both own shares of Voyager. It's a publicly traded Canadian stock that is one of the fastest growing crypto brokers in the world. If you look it up, it's Voyager Digital. It's regulated up in Canada. It trades OTC in the United States as well. So I trade through them because they've got over 50 assets on the platform that you can trade. Assets being, you know, Ethereum, Litecoin, Bitcoin, all that. They charge 0 commission. And they'll even give you money interest on your deposited coins if you leave them on their platform. So I love that one, Mark. It's a multi-billion-dollar broker up in Canada.
Yeah, I love that one too. Living in New York, I'm unfortunately restricted a bit. And Jordan, we could do an hour on just the regulatory construct of crypto. But folks, look at where you live. Your eligibility for some of these interest payment staking programs varies based on where you live. But there are a lot of options out there, and some platforms like Voyager that are very generous in paying you to keep your crypto on there. Jordan, give us 1 or 2 more in the last 60 seconds if we have it.
Absolutely. So the viewer writes in, what is a projected price of Bitcoin after it is fully adopted or reaches a scale of mass adoption, in your opinion?
I can tell you my year target. I really don't know how high Bitcoin could go. I mean, you've heard, you know, a guy from Guggenheim, who's a friend of mine, Scott Minerd, say 400,000. I think it's in the millions, quite frankly. But I think this year we're going to see something between $65,000 and $75,000 this year. I don't know if it finishes there or if we then see a correction or not. We've already seen a correction from, like I said, 57,000 down to 43,000 just in the last 2 weeks. So I think that's just part of trading these cryptocurrencies. They are decentralized in the case of Bitcoin, and it makes it challenging.
You do see a lot of $100,000 year-end price targets, though, right? Even from, from some people that we know and you have on halftime all the time. So it's you could see 100 this year. I would not be shocked. I'm not saying that's a price target. I would not be shocked.
Excellent. One final question, and just for the some of the viewers were writing in the name of the broker that Jon mentioned. It's Voyager Digital, I believe.
Voyager.
The name was
Voyager, like to take a trip. Voyager, Voyager, Voyager Digital. It's VYGVF, I think is the symbol.
VYGR.cn. If you guys have Yahoo, you want to see the OTC listing.
Excellent. One last question before we wrap up here. Let's see. What are the barriers to entry for a new competitor version of Bitcoin, in your opinion?
Huge, because there are over, what, 7,000 coins now, Mark, that are out there. We call them altcoins, folks, because there's one Bitcoin and everything else is an altcoin, in my mind. So,
Bitcoin's in a class of one. And that was part of what I was touching on earlier, Jordan, where we were talking about Bitcoin as a unique asset and a store of value, and everything else, and I mean everything else, is a DeFi story. I like Ethereum. I'm invested in Ethereum. Jon's invested in Ethereum. We think Ethereum should be in a crypto and alt portfolio if you're getting into it. But Bitcoin is in a class by itself. There's the barrier to entry is virtually insurmountable at this point.
Excellent. And gentlemen, if they want access to your slides, is that going to be available at some point?
Yes, if you ask us nicely, I'm sure we'd be willing to email them to the audience.
We'd love to.
Thank you so much. Well, gentlemen, I want to thank you very much for joining us. I know both of you are frequent speakers here at the Money Show, and I know our audience really appreciated this discussion on crypto, as it's extremely timely. And for the audience, I encourage you to tune in to all the upcoming Money Shows to see Jon and Mark and their appearances at their own events as well. Thank you both for joining us this morning. We really appreciate your time.
Thanks, Jordan. Say hi to Kim and Debbie for us.
We will. Thanks, guys. Stay safe.
And
we'll talk
Mr.
soon.
West.
Absolutely. We'll talk soon, guys. Thank you so much.
Take care, everyone. Thank you.
All right. Bye-bye.